How's it going, everyone? It's Sam. One of my long-term stocks, just reported last night their fourth quarter and total 2020 earnings, and they had really good earnings. This is a company that I've made several videos on already that I'm really bullish over the long term, and it's one that I think I'm just going to hold on to for a long time. They mine for rare earth metal. That is something that we really need here in America because about 85% of rare earth mining materials are mined over in China. A lot of people don't really realize how significant that is for the fact that the US uses rare earth for a lot of things. The whole world does. When you think about technology, when you think about EVs, a lot of what we need is rare earth material for those batteries. Now, I want to go over the company, talk about why I think they're still a good buy now if you're looking long term, and talk to you about some things that they're going to do in the future that could greatly impact their revenue. And they said that they're on pace to do it this year. So definitely stay through to the end on this one because there's going to be a lot of good information on what this company is doing going forward. It's under a $7 billion market cap now, even though it is up about 7% today after their earnings. So if you guys like this, please hit the thumbs up. I really appreciate it. That's really all I ask. But there is a link down there in case you want to check out Webull. You can get 2 free stocks. And last thing, there is a link down there to BlockFi in case you want to gain interest on your cryptocurrency. So definitely check that out. So I have talked about this company several times. You can see here, each of these videos I talked about MP Materials on. I want to continue talking about this company because I think it's a really good company over the long term. Again, this is kind of an EV play, but it's a picks and shovels play. They actually say it in one of their presentations here, but they just announced their earnings last night. They're up about 7% today. If we just look over the last 6 months here, you can see it was a SPAC and it's up a significant amount since it announced. Now, again, I've been sitting in this one since about $24 and they had really good earnings yesterday. They talked about how their stage 2 optimization remains on track, which is going to be really important. That's going to be about $200 million to actually go through with that. And I'll explain what that is and why it's so important here in a second. But I want to talk about some of their revenue first. So they grew revenue significantly. This is Q4. They pretty much doubled it since last year, even a little bit more. Their EBITDA was much better. Their EBITDA margin was really good, 42.6%. I think some people expected this to go up, but a lot of people didn't realize it would go up this significantly. Now, they have a lot of cash on their balance sheet, about $520 million, a lot of this obviously from the SPAC, and they're sitting on a big project that will increase profitability. Again, that stage 2 that we'll talk about here in a second. They expect modest volume growth for full year 2021, expect consistent per unit production costs for full year, ramp in stage 2 capital costs beginning in late Q1 with the bulk of cash costs in Q3 and Q4. So don't be surprised when we see, a lot of money going to this stage 2 ramp up. And then current REO pricing environments imply strong year-over-year and quarter-over-quarter profitability growth in Q1. So right off the bat there, let's talk about that. So they are expecting large increases in NdPr, which is a rare earth material. They were expecting, this is back from when they completed the SPAC merger, they were expecting this to ramp up to about $60.81 and then all the way up into the 140 range by 2025. Now, this is already starting to happen. This was just an article from December 10, 2020, and they had rare earth materials going up to $65, and the Swiss investment bank UBS has a current forecast of the price going to 100. So it's pretty similar to what they show here. They show a little bit higher here. They're saying 100 by 2023 instead of 2025. But this is going to be really important because these rare earth materials help batteries convert this electric power over into motion. So it is something that's really important. Now, this isn't just important for EV, but this is important for a lot of other industries. You can see here, NdPr magnets are critical for advanced technologies in all these sectors. So we have EV powertrains, e-transport, wind turbines, robotics, other automotive, consumer electronics, cell phones, HVAC, disk drive, speakers, other. There's a lot of segments, a lot of sectors that need this. Now, going to their stage 2 project, You can kind of see how it's broken down here, but honestly, this isn't really helpful for a lot of people. I think this is really where it goes into more depth. Strong investment in production finishing circuits enable significantly higher volumes of high purity separated oxides versus prior ownership. A detailed CapEx study has already concluded they have a high confidence in capital needed and potential to leverage existing infrastructure. So that's where we start to see a big increase in revenues here. They expect, if we have stage 2 over here, that at $70 per NdPr, we could pretty much double revenue. So they're bringing some more of these processes in-house, be able to increase this. They're also assuming that EBITDA can go up about 2x also, a little bit more than 2x. So that's why I think, honestly, we could have some really good revenues here coming up. I think we could have very, very significant increases, and we're already on pace for 2021 revenue based on last quarter's revenue. So based on last quarter's run rate, we would have about $170 million worth of revenue, and we're already on that pace for 2021, which I think is why the stock price is moving up today. We're doing better than people expected already, and we will have large CapEx expenses this year, but we should have less next year. So why am I so bullish on this? Well, the US doesn't want to have to rely on China for their technology, which makes a lot of sense. So right now, this is a $7 billion company. And with the increase in cost, with the increase in demand that will be coming with all these EVs coming, this is one of those plays where you don't have to fall asleep like worried at night. You don't have to wake up in the middle of the night wondering if this is a good investment. This is one of those plays that they're already increasing revenue, but with some of their improvements, this should be a very good long-term play in this market that's not dependent on whether they make the best product or have the best EV or the flashiest marketing or anything like that. This is something that's going to do well. And unless China floods the US market, which I don't think they would, unless something like that were to happen, this should be a company that increases revenue year after year, increases margin, really is a good long-term company to hold. Now, of course, I could be wrong, but I think that this is a company that I've bought a while ago. I'm going to hold on to it for a very long time. But I want to hear your thoughts. Like I said, I've done videos on this before. I want to cover it today because of them saying that they're on track for stage 2. Also, the fact that they had really good revenues that already are hitting 2021 expectations for revenue. I was really excited at this. This is something that I'm going to hold on to, and I want to hear your thoughts. Thank you guys so much. I really appreciate it. If you guys want to check out the link down below to Patreon or down to Webull or BlockFi, you can definitely check those out. And if you guys want me to do any videos, let me know in the comments below what you're looking for. I'm still trying to figure out a good video for the weekend, so definitely tell me down below. Thank you, and I will see you in the next video. Bye.